I mean, really, the only serious question is how much money do you want to make? And we're bringing it to you, that's for sure. Now, this disclaimer, of course, is not going to bring you any money at all. In fact, I hate to say it, it's probably going to stop you from making some money. But this is going to be making you some money. Now, last week, I talked about how the next big move was up. Although I did say I thought we were going to continue to move lower, I said the next big move was up, and I showed you a series of indicators that suggested we were putting in a bottom. Well, guess what? It looks like we put in a bottom. Now, we haven't made higher highs yet, but we are doing pretty well here. Let's take a look right here. Notice one very interesting thing. I highlighted this the last couple of weeks, but the purple predictor has gone from dragging the price down, from being below the price to now being above the price and leading the price higher. This shows the smart money is moving in. It shows that the smart money took advantage of that dip and started to buy more stocks. Wow, incredible. Dow Jones, look at that, same thing. Purple predictor was weak, making lower lows and lower highs. Now leading to the upside. It just made new highs. Price hasn't yet, but purple predictor tends to lead the market. So looks to me like we're going to move higher here on the Dow Jones as well. Nasdaq, well, not quite as good, interestingly enough. Price action was strong, but purple predictor's slightly weaker. If we break above that purple line I've drawn there on the chart, boy, this looks like we're going to the moon. I've highlighted before to you that I felt that the fourth quarter of this year was going to be fantastic for the stock market. Lots of reasons for it, but I thought we'd move down it for another week. I guess not. Now, another thing, I've got this as neutral. We really need to break above 144 on the IWM before I'm going to turn my seasonality indicator bullish. But look at the purple predictor. I've been highlighting this for 2-3 weeks now about how it's been so much stronger and why I didn't think that we were going to break to new lows. And look at that. We left a gap on Thursday showing the powerful up move we're seeing in the IWM. This means we're probably going to be able to move seasonality back to bullish pretty soon. Now, let's take a look. This is a different chart than I normally show you, but let's take a look at this. This is a bunch of different ones. So, and you know, they all say we should see a dip. That dip may be over. Let's go through some of them. So the one I like a lot is this blue line, kind of second weakest from the bottom. And you can see it's supposed to have a dip from the beginning of August to maybe the third week or second week in September, and then a nice rally after that. Now, let's take a look at this green line. This says a positive January trifecta, which means a positive Santa Claus rally, which means the first 5 days in January were positive, and all of January was positive, and when that happens, it's usually a very bullish sign. Well, this is the only one that there's really no dip at all in August and September. There's a little bit of a dip in October, but then it just goes up again. Now, the black line is the most bearish of all the seasonalities, which is a Republican first elected. And you can see that would call for a more significant dip. I'm not putting a lot of credence in this because I'm not convinced that Donald Trump is a Republican. No, just joking. But because there's very little data behind this. So, there's only like 3 or 4 observations, so it's not really much. Now, the purple line, that's this one right here. This is the 7th year of a decade. Now, it turns out like the crash of 87 is included here. So August and September, not really bearish. October, though, is quite bearish in this scenario, mainly because the crash of 1987. Now, so far this year, we're seeing this red line. I'll come back to that in a minute. Then this line up here, this kind of orangey one, this is the positive trifecta and the post-election put together. When that happens, you can see it's an insanely bullish situation. And the bear move doesn't really get into September. Starting in September, it starts to go back up again. This may be the preferred scenario. Now, let's go back and look at the red line. The red line is mimicking the orange line almost perfectly. It's doing a good job on the green line. It's doing a good job on the purple line, and it's actually following the blue line pretty well, not following, however, the black line at all, which is another reason why I'm rejecting it. So this is really telling us that our seasonal bearish move may be over, or it may be the next time we get a dip is going to be in October because of these top three scenarios. Not my most preferred. I think really the blue line is still the most preferred because it has the most data, therefore is the most likely to be occurring. Yield curve is now going to start to kick in and become a positive for the stock market. Asset allocation moving to the upside, becoming a positive for the stock market. Market RISKDICATOR. I talked about this last week, how it's skyrocketing. Very bullish movement here. The market wants to get frisky. That's what this is telling us. Global shares sluggishly moving higher. I don't really want to be involved. The place to be is the United States. But emerging markets, I've been focusing and hammering on this for a long time. You got to be there or be square. Emerging markets, EEM. Bonds. The purple predictor had been leading up, but notice the purple predictor started to weaken here the last couple of days of the month, and Friday was not a good-looking day. We got up to the old highs we made in June. We sniffed them out, and we said, nope, not ready to go to new highs yet. So right now, I'm still a little bullish on the bond market, but you know what? I don't really want to trade it because it seems kind of boring to me. I don't like boring. Our indicators for our bond key indicators are neutral. Now, the most important one is the blue line, and that suggests lower interest rates. So that's the one to pay most attention to. And that would suggest that bonds could move a little bit higher. Dollar. Now, we're starting to run out of gas on the downside. I started talking about this before. You know, look, you should be short right now. I'm not really a big fan right now of going short at this point at all. I'm not a big fan of adding to my short position right in here at all. I think it's now we're in a mode of starting to take profits on any short positions that you got on right now. We're running out of momentum, and that means that we're soon to break that downtrend line. Gold, on the other hand, you know I've been pounding the table, jumping up and down. My fists are black and blue. I've been pounding on the table so much. Wow, 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 wow. Breakout central here. This stuff is going much higher. This is a fantastic month. September's a very good seasonal month as well. Look for gold to move up towards 1,400. And for our fully paid up members, you know we are heavily weighted in the gold market and loving every minute of it. Gold indicators are mixed, however, but I think there's other factors which fully paid up members have access to, which suggest we're going to see gold up to 1,400. Oil, gigantic trading range. We're at the bottom. Now we're going to go back up to the top. Please, instead of taking Ambien, just look at this chart. It'll put you to sleep as well. All right, everybody, you know what I'm going to say, so I won't bother to say it. All you freebies, you should sign up right away. But I also want to let you know we've got 2 dates now for our amazing Stock Success School. This is the premier stock education for trading. I'm going to teach you the techniques I use to manage the #1 growth mutual fund in the United States. Yes, I was the manager of that fund. It's a live seminar in Las Vegas. It costs a peanut to attend. Just go to that website up here at the top, bit.ly/stock success school. Make sure you capitalize the 3 big S's there. If you go there, it'll give you all the information, the dates, the times, the tuition, and so on and so forth. But I would highly, highly recommend you to go to it, particularly if you're new to the markets. Okay, that's it for you freebies. Fully paid up members, hang in there. Oh, got some great stuff.